I'd like to start by welcoming all our viewers to today's webinar. The topic of today's webinar is reporting season, beating analyst expectations. My name is Rocco Panzarino. I'm one of the senior account managers here at Maqro, and I'm here with Joshua Barker, who's the head of our wealth division here at Maqro.
Thanks for having me, Rocco. Exciting to be here, leading into, I guess, one of the busiest times when it comes to company specifics anyway.
Yeah, I believe it's a really pivotal time for Australian businesses as well as investors because we get access to those most up-to-date information and allows us to evaluate a company's financial health and strategic direction moving forward.
That's exactly right.
So just a disclaimer before we commence, the economic and market overview is presented as purely factual information and should not be taken as advice. The model portfolios and hedging strategies are purely general advice in nature and does not take into account the personal objectives, financial situation, or the needs of the investor. You should consider whether the information is appropriate to your needs and, where appropriate, seek professional advice from a financial advisor. We'll start off today's webinar with a bit of an overview on reporting season and what that entails, followed by Joshua going into analyst expectations on certain industries and companies, and what they're expecting. We'll then dive into what to actually look for in these financial reports, followed on by some actionable strategies that investors can use to capitalize in this period, and more importantly, preserve capital when expectations are missed. We'll then go into discussing some real-life examples on companies we've invested in past reporting seasons, and the effects that those reports had on these businesses and ultimately their share prices. We'll also have a brief product demonstration of Maqro research, where we'll go into the strategies and the functionality of the Maqro portal. You'll get a clear idea as to why our clients love to work with us, especially during these times of volatility and uncertainty that we're currently in. We've also decided to give our viewers an exciting reporting season offer for those who would like to take advantage of some opportunities this upcoming earnings season. Most locally listed companies have financial years ending on 30th of June, and they report their full year results in August. Half-year results are generally released in February, although some companies with December year ends will report their half-year results to June in August. Earnings season allows us as investors to examine a company's financials in detail, but it's also an opportunity to better understand what the company actually does, how it makes its money, its social or environmental impacts, and how those impacts are really being managed, as well as its place in the broader market, its plans for future growth. So taking this into consideration, all these micro and macro factors can help investors build a clearer picture of a company. Now, it's important to be aware that reporting season can cause extra volatility in the market. Companies may over or underperform what market analysts have forecast, which can essentially lead to unexpected share price movements. On that note, Josh, can you tell us a bit about what analysts are forecasting at the moment?
Yeah, look, it's obviously it's been quite a negative period in the markets over the last couple of months, but analysts are quite bearish, I guess, given the market sentiment. But what we've seen so far is some companies that I guess are a little bit earlier in their reports, maybe they do quarterly reports, have started to, I guess, bounce back from those initial downtrends. So we've seen Megaport rally 20% on the back of its report. Also Kelsian, formerly C-Link, the bus company, move about 10 or 15% higher on the back of its reports. We are expecting bumper dividends to come through from the energy sector as well as the financial sector, whereas industrials will be the strongest performing sector when it comes to by way of earnings, thanks to increasing their profit margins. Relatively, though, across the whole, revenues are expected to modestly grow, and earnings are expected to actually decline given those cost pressures increasing from the market at the moment. So watching pensively, but I guess it does come down to company selection, and we've identified a few opportunities that we're looking at anyway.
Yeah, so what sort of factors then would influence whether you would buy, hold, or sell upcoming reporting season?
There's obviously a lot that comes out in those initial reports. Some of them can be, three or four documents. An annual report can be up to 200 pages. But the main things that we want to look at can be divided into two sections. One is how they went in that period, and the second is the outlook. So how they went in that period, one thing that's obviously really important is revenues. But I guess on the back of that, what's most important would be the earnings. So earnings is, I guess, how much the company's making after all of its costs from those revenues. And then that company can easily determine a dividend on the back of that. So that's, I guess, the main numbers that you want to look at in terms of the actual release of the numbers. And then the company will give guidance largely on what they're looking at in terms of their revenues and their earnings for the next financial year. And I think that's definitely the most important factor, is a company's outlook. Are they a company that's continuing to grow their earnings? Company that's continuing to grow their revenues as well, and then therefore likely to continue to do well. Alternatively, company that's having declining revenues is obviously a very bad sign. Company that's having compressed earnings due to the market scenarios is definitely a bad sign as well. So what we like to monitor is not only those numbers on a nominal basis, so what the numbers were and what the outlook is, but also comparing that to the analysts' expectations. That's a really common, factor in the markets. Clients are looking at, the report numbers seem good, but the most important thing is what were the analysts expecting, because that's what's been priced in prior to the report. So, for example, analysts are expecting $100 million to come through in terms of revenues. Company comes through with $90 million. The stock's likely to sell off. You might be thinking $90 million is great for a company to make. I think a good example of that the other day was the Woodside report. They had a great revenues and earnings on the back of that. And unfortunately, it wasn't quite as high as what analysts were initially expecting. So the stock sold off marginally throughout the day.
We'll now go into some of our past recommendations. So in February this year, the research team recommended Grange Resources. Now, they were watching this play closely due to a lot of their internal metrics, as well as the macroeconomic conditions at the time as well. But one of the interesting things about Grange was it's the leading magnetite producer in Australia. So other producers like BHP, Rio, and Fortescue produce hematite. So when produced, magnetite actually creates a lot less emissions than hematite, therefore better for the environment, and it actually makes a higher quality of steel. So previously, magnetite was selling at a 41% premium to hematite. But what our analysts actually did was track its pricing. And shortly after, it was selling at a 70% premium, which the market hadn't really priced in at all. So they're also tracking the freight costs at the time as well, which pretty much remained flat during that period. And so it's clear from this information that Grange Resources were in a great position and positive impacts on their financial reports were likely. So we then notified all our research clients that we were entering this position pre-report. And when it did report, we saw the share price close up more than 30% on the day. I think it was one of our quickest price targets ever, right, Josh?
I do believe so. You had to be quick into getting involved in that one, but that's why you need to check the portal.
Next one was Nine Network. So about a year ago in financial year 22, we were watching the Nine Entertainment closely as well. Now, Nine Entertainment had strong expectations coming into the August earnings season. It was expected to have 21.5% growth on revenue. We also saw ad spending on TV increase by 40% in April and 56% in May leading up to the report. Now, this indicates higher revenues for Nine Entertainment. Stan had also grown to accumulate 45% of the video on demand market share, which was a large factor in their growth in revenues as well. Although when they did report, they largely did beat expectations, which what our analyst team found was that they updated their cost-based guidance for financial year 22 and weren't expecting their revenue to grow as fast, as well as having their EBITDA margins set to shrink as well. With this sort of information, our outlook changed significantly on the position. And what we did was notify our clients that we no longer see the upside on this position and actually crystallize a 5.4% profit on that. And what we can see is that the market slowly adjusted to this forecast, and it really signifies the importance and the impact reporting season can have on a company's share price, as you can see there on the screen. Now, what can investors best do to take advantage of this sort of information, Josh? Would you buy pre-report or post-report? What sort of factors would influence this decision-making?
There's a range of different strategies that you can play around reporting season. I think that Nine Entertainment example is a really good one, highlighting what I was speaking about first, where the outlook can sometimes be more important than the numbers. Obviously, as we know, the share market's the most forward-looking indicator. In terms of what you can do leading up to the reports, it can be a good opportunity to get involved in companies prior to their report. When those companies do beat expectations, we've all seen a stock rally into a report and then continue to move higher on the day it reports. And there is a lot of misconception as to why that occurs. The main reason as to why that occurs is there are analysts out there that are predicting the actual numbers that will come through from that company. So in that example that I used before of that company expecting $100 million in revenue, what will happen is as that report gets closer, let's just say it's about 3 weeks out, there'll be the expectation that the average consensus is about 100 million, and then that will slowly start to either increase, decrease, or stay flat. So for example, if it's increasing, those expectations will be to $110 million, $120 million. And then when the report comes through, it's $123 million as an example. So that's a very popular strategy that you can implement if you've got the information at hand. Fortunately, we do have the information at hand behind the scenes here from our analyst team. They use a terminal in-house called Reuters, which allows us to get every analyst's expectations right across Australia. And that is exactly what we use for our reporting season recommendations. Part of the reason anyway. You obviously want to take into account factor in the macroeconomic themes on top of that. But it's very easy to have a company that can have a nice rally into its report, exceed expectations, and can actually make 15 to 20% on the back of that report.
So as I said before, we can expect to enter areas of heightened volatility in the upcoming weeks. Our analyst team have been working extremely hard to identify plenty of these opportunities in the current landscape. So what we'll do now is we'll have a short demonstration of where you'll get a great understanding of how we actually communicate these opportunities to our clients.
As I want this to be just a quick 15-minute demo, let's jump straight into things. So firstly, Maqro Research is an online stock market research tool, currently helping thousands of investors gain a better understanding and walk away with a clear plan when executing their trades. All of our recommendations are curated in-house. The resources that we allocate to the recommendations you see are institutional grade research tools costing up to tens of thousands of dollars a month, subscriptions, a team of research analysts, product and operational staff. But the core foundation we really rely on to present our recommendations is a quantitative, rule-based model that assesses over 54 data points. So let's take a proper dive. On the portal, the first thing you will notice is the dashboard. Dashboard combines all of the recent recommendations across our 6 different model portfolios. The model portfolios are important to mention as it is a solution to a key problem in the research industry, which is, Conrad, thanks for the recommendations, but is it right for me? Now, we don't provide personal advice, and all of our recommendations are general in nature. So I do have to say, basically, we don't take into consideration your objectives, financial situation, or needs. But to help our clients receive more relevant general advice, we've curated a broad range of model portfolios spanning multiple strategies. And each of our recommendations are allocated to one of these portfolios. So firstly, it's appropriate research. You just decide what appropriate means to you. Secondly, our recommendations are dynamic. Another problem we solve is, Conrad, thanks for the buy suggestion, but at what price do I sell? Put a stop loss, and more importantly, how do these numbers change over time? So if you're researching online yourself or using a service which likes to tell you to buy once and that's sort of it, this really is a solution for you. Being an online research portal, it allows us to go beyond issuing research papers. You can view recommendations directly on the portal. So this means we have the benefit of dynamic, live updates to any of our content. So our recommendations, whether it be a buy, sell, and stop loss, are all managed internally to take into consideration events even after the recommendations are released. So it's updated. The reality is that we're not always right, but we do make an effort to ensure we can minimize our risk and maximize opportunities. And we do that by adjusting stop losses, price targets, whilst the stock is in play. Now, finally, allocation sizing. So this is a solution to, Conrad, thanks for the recommendation, but how does this compare to other recommendations you've sent me? Now, not only do we allocate a macro score for all of our recommendations, giving it a general score based on the metrics or factors of growth, value, balance sheet, market sentiment, quality, and relative valuation. But we also look into portfolio management by essentially giving you a collection of individual stock recommendations with allocation sizing. And all of that is based on diversification considerations, market cycle considerations, and also target sector weightings. Now, all of this is nice. Practically, I don't like to have things with so many different providers. This is a common problem that we get asked in terms of finding a solution for. So what we have released is, well, we have a trading platform. The benefit of our trading platform is that it's CHESS sponsored, which means you own the stock and it's not under a custodian. Another thing that's often asked to macro stuff is, well, it's a custodian model that's allowing these other stockbrokers to give me a discount brokerage rate. There's a bit of risk to that. Or there's risk to not owning the stocks that you have in your portfolio. But the other thing is we do that too. So we give discount brokerage rates through a CHESS sponsored model. So please check out the website and our FSG to find out the details about brokerage rates. But I guess an important thing to note is for transparency, the reason why we offer such discount brokerage rates is because trading platform revenues or brokerage revenues is not our only revenue stream. It's by far one of the smallest revenue streams when it comes to our self-directed trading execution. We make money by providing strong advice. We have no interest in the number of trades that you place. For us, it's more so about making money when we give you value. So that's a very quick rundown and sort of walkthrough demonstration of our portal and a few other parts of our business and our principles. If you have any other questions, please contact us either via email or just give us a call, and we'll look to answer any other questions that you might have. Thank you very much.
Great. So that's the portal that you get access to. I guess my question, because I'll be keeping an eye on the portal as well for my clients looking to buy and sell, will you guys be releasing recommendations that you think are going to exceed expectations when it comes to those reports? Yeah, definitely. I know the analyst team have been staying back really late lately to identify these opportunities. And at the moment, as you can see on the screen now, what we're actually doing for our webinar viewers is allowing you guys to get a feel for this yourself, get access to all of our 6 strategies, all our current stock recommendations, as well as the past ones. And we're offering this membership on a free trial and then on a monthly basis thereafter. So it's a really good opportunity at the moment to get a feel for our research, especially coming into reporting season. So we have a quick demonstration here as well on how you enter to take advantage of this free trial. So you just click on your upgrade my plan button there once you've logged into the portal. Click upgrade to research monthly. And once you enter the details there, you'll not be charged until the end of the 14-day trial period. Now in that time, if you wish to cancel, as I said before, you won't be charged. And I think it's the most effective way to show you the value, especially in this crucial time. So that just about wraps us up. I'd like to thank you all for attending Maqro's reporting season webinar. Oh my God. Did you record it? Mate. You're concerned?